we made more than 1 crore in profits in just the last 6 months in the stock market. And before you think it's one of those get rich quick stories, it's not. It's our journey over the last 5 years of how two regular engineers working the 9 to 5 job learned the game, built systems, made mistakes, and finally reached this point.
So if you are someone who is serious about managing and growing your wealth, stay till the end, because in this video we will be sharing our learnings we wish we had learned 5 years ago.
In this video, we'll share with you our verified Zerodha P&L for the last 6 months, that is from April till September of this year. We'll also show you the exact steps we took before we even started investing, that is sorting out our personal finances. In this section, we'll cover how we built a solid emergency fund and how we sorted out on our health insurance, which is a crucial but often confusing step. On that note, we know how difficult finding the right insurance can be. We have found an incredible platform called Ditto, which is backed by Zerodha, that makes the whole process spam-free and simple with free expert consultations. They also help you with claim support and a bunch of tools to make your insurance journey much more easier. We'll dive deeper into this later in the video, so stay tuned. After covering the foundation, we'll share our entire stock market journey, the key mistakes we made, the lessons we learned, and finally, a clear roadmap for you to start or accelerate your own journey.
So without any further ado, let's jump to our Zerodha verified P&L. So as you can see, this is my Zerodha trading account. So here, as you can see, I've selected the equity segment, the combined P&L, and the date range from 1st April to 30th September. So as you can see, the realized profit is 51.74 lakhs during April till September end, and unrealized is around 1.7 lakhs. So now let me walk you through my portfolio journey. So as you can see, on 1st April, the account value was only 47 lakhs. Now it has grown to around 1 crore 13 lakhs, somewhere around that. So I have grown my capital to around more than 2x in this period. So now if you compare this performance with the other index, so as you can see here, my portfolio performed 93% in from 1st April till end of September, while Nifty is up by 6% and small cap 250 index is up by around 10-11%. So it has like significantly outperformed Nifty and small cap 250 index so far. So this is bit God's grace as well as market's grace that market has been good post April. Like January to March was a difficult period for the market, especially in equity segment. But post April there was a good recovery in market. So April to July was pretty good. Last 1 or 1.5 month were sideways. That's why our portfolio is also sideways. But still we are preventing any drawdown because of our tight stop losses. So this has prevented any drawdown during this period. Even though if you'll see that like Nifty has corrected a lot. For example, if you'll see from here, like in 15th July to August, Nifty has experienced a correction, maybe by 5-6%, but our portfolio has not. It has consolidated in a range during this period. So here are the places where stop losses and risk management help you. So we will talk about it in more detail in the coming sections. So now over to Apoorva's portfolio.
So over to my portfolio now. Again, equity segment combined P&L for the same duration, that is 1st April to 30th of September. And if we see here, so here the realized P&L is around 49.97 lakhs and the unrealized loss is 25,000.
And as you can see in the September month, there are too many red days because too many stop losses were hit because the market was very in a correction sort of mode. So I expect like the markets will behave nicely in the coming months.
Right.
So let's hope for the best.
So moving on, let's see how the account value progressed in my portfolio over the course of the last 6 months, right? So if we start with the 1st of April, the account value is around 67 lakhs, right? And over the course of the next 6 months, it continuously grew. And as of 30th September, it's around 1.33 CR, right? So now let's see how my portfolio's performance has been in comparison to like other indices like Nifty, small cap, right? So again, since 1st of April, if you'll see, my portfolio's NAV that is in green, it's around 75.65%, Whereas if you compare that with Nifty, it's around 6.37%, and Nifty small cap is at around 10.88%. So again, similar to Harsh's portfolio's performance, this portfolio has also been able to consistently outperform Nifty by a very significant margin, right?
Yeah.
And we are very thankful to the markets and by the grace of God that this performance is maintained. Also, I'm very excited to share with all of you that given the performance of our portfolios, we are privileged enough to be in the top 5 and 6 traders list on the Sensibull Hall of Fame. So I'll attach that link in the description box as well. Do check it out. So right now you see this big number and this milestone, but actually there's a lot of backstory to this, and our journey, has had its fair shares of ups and downs. It's not been super smooth throughout, right? We made so many mistakes, learned from them, made some mistakes again, recovered and evolved. So I think now I want to share with you a bit of our backstory and rewind a bit to back when we were in college and how we actually got introduced to the world of stock market, right? So I think back in college, I think we were like pretty much clueless,
Yeah.
like most of you might be, right? Harsh was in IIT BHU back in 2016. I was in IGT2W. So, Harsh, why don't you start with your journey, right?
Sure, sure. Yeah, so as like most of you, I was also clueless about stock market when I entered my college because no one in my family was into stock market. They were into business, but not into stock market specific. Plus, there was a kind of negative bias towards stock market, especially in my family, that it is gambling and all. So I also stayed away in my pre-college days. But in my college, I was a active member of finance club of my college, and this was a blessing in disguise for me. So I got to learn about stock markets a bit through that finance club because many guest lectures arrived in college, and by talking to them, listening to them, I understand what is stock market and all. Then I thought, why not? I got fascinated about it. And one day, like one fine day, when I was having my dinner in my mess, hostel mess. So after like the dinner got over by I think 9:30 p.m. I went to my room, and then something kicked in my mind. I just googled who are the most successful traders or investors in stock market across the globe, in India, everything. I started researching about them, how they started their journey, what sort of things they follow within stock market. So like that Google went on and on and on till 4 a.m. in the morning. And at the end of it, I had a list of bunch of books which I can was a good starting point. So I next day I ordered those books from Amazon. So one was Mark Minervini was the author. Then there was William O'Neill books. There was Peter Lynch book, One Up on Wall Street. So I thoroughly read all of these books in the next 1 month, and now I became even more fascinated about markets. So what I did was I started saving my little bit pocket money, which were supposed to go to the chai and samosa in the canteen, but actually went to my first trading account. So that was a very small amount. That was only 10,000 rupees, and from there my stock market journey began. Which, but I learned a lot through these years, like last 6 7 years, and I improvised a lot. I constantly, even today, I'm learning and improvising my strategies,
Right.
making it better each day. Okay, so now why don't you share how you started, how you got familiar with the stock market in
Right.
first place?
So, my journey was quite opposite to Harsh's because in college I had never like at all read about the stock market, and I never intended to like read about it because I was of the opinion that once I start my job, I start earning, then I will start investing. And also even like in my family, there's this strong bias towards like go for the safer instruments like FDs, even not mutual funds like bonds and SGBs and those things, right? So there was a very like strong unconscious bias towards not entering this world of apparently gambling that we used to call it. So again, similar backgrounds in terms of how we viewed the stock markets initially. So in college, the main aim was to secure a good job and like start earning well from the get go, so that then I can plan my financial journey ahead, right? So that moment came in 2020 when we both actually graduated, and I got a pretty good job at a big tech company as a software engineer. And it was COVID time, so we were all at our homes, no expenses, everything was being managed by parents, accommodation, groceries, everything, right? So I was like, what do I do with all of this money? I should have a plan in place. And my father was like, just put it in FDs. And I did put a big chunk of it in FDs initially. I got my joining bonus in the first month itself. So all of it went into FDs. But inside, I knew that, I want to venture out and take slightly more risks because I don't want to settle for the traditional like 6-7% that FDs give, right? So initially I came across this book called The Psychology of Money by Morgan Housel, and he's my favorite author in the whole world. It was through his book that I got introduced to the power of compounding and how consistently with time, with patience, if you really invest in the markets, invest in assets and not liabilities, you can truly build like life changing wealth. So I think it was important for me to change how I viewed wealth and investments and assets and liabilities to really get started. And another book was Rich Dad Poor Dad. I think that book also really changed my perspective completely towards money and wealth, right? So I also, like any other person, I did some courses online. I watched like influencers videos. I put my money here and there, but nothing was really striking. I'll talk in much more detail about what I actually did, but in short, nothing was really hitting the nail, and I could not build that conviction to go directly into equity investing and direct stock picking. But things completely changed when I met Harsh in 2022, and he was already like well versed with stock markets, and he was actively trading the markets. So he actually introduced me to this world, and he gave a structure to my learning. And he would tell me, invest this much here and this much there, and like read up about the company before investing so that you build your own conviction. So I think that is when I officially started, way later than Harsh, but better late than never, right? And that was actually one main turning point in my life came when in 2022, towards the late 2022, big tech was going through a like wave of layoffs. And I was like, I don't want to rely solely on my salary because you never know, right? So that is when I decided that I will take this very, very seriously going ahead. And I met the right person at the right time who was guiding me. So this is how I officially entered the world of stock market. So I think before we dig deeper into our backstory and our journeys over the last 5 years, what all we did right, what we did wrong, and where we are right now, I think it's important to talk about two foundational aspects of personal finance. That is something that people quite often overlook, and we had sorted these out pretty much early in our lives. So that enabled us to go all in into equity and take this much risk in our lives, because we are at a point where we almost invest all of our savings now into equities, but it was not the case 5 years back, and I think this is where we kind of resonate on this, that we had to sort these things out very much early so that we have that peace of mind at the back of our head, and not worry about our savings or anything at all. So let's talk about those two essential things that we took care of early on before we went full on into equities. So Harsh, why don't you talk about the first one,
Sure,
right?
sure. So the first major point is that we invested in ourselves first. Okay.
Right.
So wealth creation is a three-layered process. And suppose there are three funnels, one at the top of the other. The first funnel is your earnings. Okay. So whatever you earn, after that only you can save and then invest
Right.
and then compound your money, right? So people often ignore the first funnel, which is your earnings. So
Yeah.
first increase your earning potential. Okay. So more and more water is filling into your earnings, then that will drip down to your savings.
Yeah.
But that will only drip down if you control your expenses while increasing your earnings. Okay. If you increase your earnings and proportionately increase your expenses as well, then that dripping won't happen. So
Yeah.
savings bucket, maybe the funds should come, and then once in the savings bucket you have funds, then you can allocate it to investments as well. Okay. So then once your investment pool size is big enough, maybe let's suppose more than 30 lakh, 40 lakh, or even higher, then you can focus more on increasing your CAGR and all these things. But first you should focus more on the top two funnels, which is your earnings and your savings. Okay,
Right.
because that will reap you more dividends than
Yeah.
focusing on CAGR.
Right.
Because on 1 lakh capital, even a great CAGR can't help you much.
Right.
But in first place, if you increase your earnings, once your investable pool is big enough, then even a slight change in your CAGR can do wonders for you.
Yeah.
Okay. So once your pool is big enough, investable pool is big enough, then you can ignore the first two. You don't need to, live a frugal lifestyle. You don't need to focus much on your earning capacity, because only your investable pool will fund all your lifestyle, all your things will be sorted then.
I think completely agree to that point. And in your early 20s, focus on your skills that will ultimately increase your earning potential. Like take on courses, take on projects that will help you upskill your game, and that will eventually, lead to better salaries, better increments, change jobs if you can, like not very frequently, but at the right time, so that, you get that extra alpha in your salary. Uh, People dismiss that, 9 to 5, what is like 9 to 5 kya hi hai, and it really uh, I would say that, we personally have seen many people build life changing wealth through their 9 to 5s, right? So there's this very famous quote that, use your 9 to 5 to fund your 5 to 9 to get rid of the 9 to 5. So I'm not advocating for you to get rid of the 9 to 5 early on. Use that 9 to 5 to really build that kind of saving corpus that, you can invest a big chunk of it wherever you want to, and that will generate that alpha for you.
So now that we know that we first have to focus on our earnings potential, then the savings, and then the investable pool, right? And once the investable pool becomes big enough, it will take care of the first two. You don't have to. But the problem with this investable pool is that it is very fragile. Why I am telling that it is very fragile? Because even a small mishappening or your job loss or layoff, anything can hamper your investable pool by a large degree. Suppose you invested all your money in equity, then suddenly you lost your job. Now the market is down and you have to pull out money from that equity bucket, right? So you are selling your valuable assets at a dirt cheap price. This is not what you want, right? That is why an emergency fund is very important, because in those unseen circumstances, if they arise, you have a separate fund available for it, so that you don't have to disturb your investable pool, right? So you should have like a 12 months of emergency fund. This is what we personally follow, and also advise you to follow as well, because in case of any unseen circumstances like a job loss or disability or anything, you will have some pool, a buffer, and 12 months buffer time to get the things back on track, right? And again increase your earning potential and all.
And when you talk about the savings pool and how it is at risk of being wiped out by a possible mishappening, be it a job loss or any family emergency, I think there COVID was a major wake up call for so many of us, right? I think we saw it firsthand with people in our circle that in just a matter of few weeks you can lose your health and all the wealth you've accumulated over the course of many years, right? You've not taken care of your savings pool in the right manner, be it saving up enough, like as Harsh mentioned, an emergency fund, and also like making sure that your health insurance is sorted. Because we think that we're people like us in our 20s and 30s, we think that we're young, what's the worst that could happen, let's we put it off for later. But then suddenly a medical emergency comes unannounced, and you have not sorted out things that could protect your savings, and suddenly you've lost out like lakhs and lakhs of your savings at once, right? So again, emergency fund is a key pillar to ensure that your savings are intact. And I think layering that with a health insurance, a robust health insurance plan is crucial. Um
Because your emergency fund can get wiped off in a day if you face any unseen medical situation, because health costs are too much these days.
yeah,
So treat your emergency fund and your insurance, health insurance, as a strong protective layer around your investable capital. Just like on a mobile phone, on an expensive mobile phone, you apply the tempered glass.
yeah,
Health insurance is just like that. You
yeah.
apply it on your savings, your investment,
Investment, yeah.
and it protects whenever you face some rough patch.
So, we also went through this whole journey. So, although, we had our corporate medical insurance in place when we were in our jobs, it's a very limited value that, doesn't really cover everything. And in case something major happens, it won't be able to cover all the costs.
Mostly, I think it's majorly 5 lakhs
5, 6
cover only,
lakhs,
5,
yeah.
6 lakhs, 10 lakhs maximum.
Right.
But that is not enough in India these
Yeah.
days.
Yeah, totally. We also went through this whole journey of finding out which insurance we need to really select for ourselves and our parents, our loved ones, so that we are protected against any medical emergency. And to be honest, it was quite overwhelming. The jargons, the hundreds of clauses, and the fear of talking to an agent who might just push you to buy some
Yeah.
random package or some plan that might not even fit you, and then suddenly you have an emergency and you find out you can't even get that claim or get that amount reimbursed. And we've seen this happen with so many people. So people, and there are so many scam calls that you get every day, other day, right? So we were very afraid to go through that whole journey. I think this is exactly where Ditto Insurance came to our rescue. And what I really loved about their platform is that they are first of all Zerodha backed, and they're also IRDAI certified platform. So credibility wise, it's completely foolproof. And their goal isn't to sell you random plans like all these scamsters do. It's to understand truly what you need and what tailor that plan according to your need. And I think the best part about Ditto is that they offer you a completely spam-free promise. You can have a call with one of their certified advisors, and they will help you understand all the policies, and they won't bother you with repetitive calls after that at all. So for them, their whole mission is to educate us and not spam us, right? And also, to get started, you can book a free call on their platform, which is super simple, and I'll walk you through the process just about now. So you just have to head over to the website joinditto.in, and there's a button to book a free call now. Click on that, and you can either book a call for health insurance or term life insurance, and schedule a call with again, as I mentioned, IRDAI certified, so all the advisors also certified. Pick a slot of your choice, add your time, and then confirm your schedule, add all of your details, confirm your booking, and you can have a call with their certified agent, and they will genuinely walk you through all of the plans and pick what's best for you, right? And another great thing about their platform is that they actually help you with claim support, which
Yeah.
is like so
Most important thing.
yeah.
Because when you face some medical emergency, you don't know whom to talk to. You bought some random insurance, and then when you need the actual support, you don't know whom to call and whom to talk with and who can get you processed, because you will hear many new terms from the health industry that you don't have this, you don't have that in your insurance, then you don't know whom to ask for support. So that's where the claim support comes in, and you should look out for a best claim support so that you can have the most out of your health insurance policy.
Totally. They also have some free tools which are very useful, that can help you, compare some of the policies that are in the market, right? You can go to either health insurance, life insurance, and go to the compare health policy section. Select the insurer here, Aditya Birla, maybe their platinum plan. You can compare that with any other plan like SDFC, right? It will give you a comprehensive report on which plan offers and how they differ against each other, right? I think this is my favorite feature about the platform. So
Because if you talk with SDFC, they will say their plan is the best. If you talk with Aditya Birla, they will say their plan is the best. So you don't know actually which is the best. So this is a neutral advisor which compares all of them, and then you get everything under a single roof.
Totally. So I think with our health insurance plan sorted, we finally had that pillar of protection on our savings and investment pool that enabled us to go with full confidence into the equity world.
Yeah.
So now, given that we talked about our initial journey of how we actually entered the stock market and how we ensure that our savings are in place, our health insurance is in place, let's talk more about our stock market journey and dig deeper into what mistakes we made, what we learned out of them, and what you can possibly learn and emulate from these learnings, right? So coming back to my journey, right? So before I met Harsh in 2022, I was following random stock tips from friends or finance influencers, as I already mentioned. I remember purchasing this stock, Deepak Nitrite, back in, again, it's not a buy or sell recommendation, but just as an example, I purchased this stock called Deepak Nitrite based on a friend who was a CA, and it was back in October of 2021. And given my new job, I did not really have a lot of time in my hand to research about the company and understand if it's the right time to enter or exit or whatever, right? So I just put my faith blindly in him. I entered the stock then, and I was convinced by his thesis that the stock is in an uptrend journey, and there's a lot of juice left in the company because it's in a great sector and prospects are great. So I put a big chunk of my money. I remember I think 1.5 to 2 lakhs I put back then. It was a big amount for me because I was still it was just 1 year into my job, so it was almost like 1 month worth of salary. But then what happened was, in just a matter of a month, that stock corrected by 27%, and turns out I had bought it at the peak. So I was completely like shocked and devastated by losing like a big chunk of that investment. And I think that is, and I incurred a big loss, obviously. So I think that is where I learned my first mistake, that you should never invest by borrowing someone else's conviction.
No.
That never works. It might make you lucky 1 or 2 times, but not the third time. And trust me, this is experience telling you. So never do that. So after going through that whole ordeal of losing 27% in a month, I completely ditched that idea of talking to friends and buying like borrowing their tips. I remember watching a very popular YouTube videos by I won't name these influencers, but they were like promoting small cases like anything. And I saw that they were showing how this small case had given this much returns in the last 5-6 months. So I was very fascinated with that idea that they have this whole basket of stocks that they have prepared for you, and they shared their small cases with us. So I thought, let's just copy it, right? It's better than asking like random stocks from friends. So I remember completely copying like 2-3 small cases from these influencers, and actually some of them did well. I wouldn't lie, they did yield results for some time. But then after one small case would go down, and I would start panicking, like, why is it going down? I have no idea. It was not like built on conviction of my own research or my own understanding. So again, when like I think like 2-3 small cases were not performing well, so I completely again got worried, and I exited the whole thing altogether. So this is where I kind of had my second learning, that if a setup works for someone else, doesn't mean it will work for you if you simply copy them, right? If you copy a setup, you'll not know what to do when that setup fails, or the set of stocks go down or up. You will not know why, and you'll not be able to stay invested through its whole journey of ups and downs. So after all these trials and errors, I realized that maybe stock picking is not meant for me, and I should maybe settle for my FDs that were already in place, and some mutual funds perhaps. I read about these mutual funds online, very popular names, and I invested. I kept my SIPs, and I made them grow over time. But then that itch to that itch to grow my money even further, like beyond the average nifty returns that you get, and these mutual funds emulate those returns, that itch was always there, and it kept coming back to me, that hey, I'm young, I don't have any responsibilities, no liabilities, no home loans, nothing. So what am I doing with all of this money? Simply putting it in very safe asset classes. And I think that is where I met this guy, and as I mentioned, he was already well versed and trading the market since 2017 back in college. And I think he gave me a framework that you should first learn about the stock market. Don't just put your money randomly here and there. First, understand how the market works, who are the players, what are the market cycles, what are the sectors, how do you really understand when the market is in a bear phase or in a bullish phase. And the most important thing that he told me was, treat this investing like a business, like you're a business owner. Don't see it as a side hobby or a side activity that you do in your free time. That mindset shift for me was very important, to see this whole world very differently. And so that is when I decided that this will be my own business that I nurture and grow over time, and not like a passive investing that I do. And so now it's been almost 4 years, and he's taught me a lot. And I would say I had an unfair advantage when it comes to learning, because when you have someone who understands something deeply, all of their knowledge comes to you free of cost, and in a very short span of time, you can adopt their whole learning that they've mastered over the course of many years. So, initially I would invest like 10-20,000 in a stock, and not knowing what to do when it would go down up. So coming from there to now, when I can put 10 lakhs, 15 lakhs at once in a stock, because I know the story, I know if it's fairly valued or not, I know if there are going to be any developments in the stock or not, and staying invested through its ups and downs, because I have my risk set up in control. So now I'm in a completely different position in my life. And I think this is where my third learning came, that if you can have a mentor or a friend who is a master in a field, try to learn from them as a genuine student. And if you can emulate their learnings in your life, I think that really fast tracks the process of how you approach something, right? Now over to Harsh and how his journey unfolded after he started with the stock market back in college. So why don't you dig deeper?
So I've made a lot of mistakes in my journey, so don't judge me for that, first of all. So when I started like with my 10,000 money, which I earlier told you, I put it into my trading account and I divided it into two parts. So 5,000 I put in FNO, which was, at that time I thought that this is a get rich quick scheme. So I put 5,000 in FNO and 5,000 in normal cash segment equity trading. So that 5,000 which I put in FNO quickly grew to 6 or 7,000 in a week. But all of a sudden within a month it was blown away. It was zero. So my FNO capital from 5,000 it became to zero just in a month. I realized that FNO is certainly not made for me,
Yeah.
and now the data shows that it is not made for 99% of the retail traders. Okay, so but the cash segment I kept on experimenting. So with that 5,000 only, I can buy a stock, sell it in some profit or loss, then again re-enter something. So my scope of learning was very big. So FNO mein to in a month I blew up my account, but in cash segment I can use that to experiment a lot and learn a lot, right? So throughout my college days I also like kept investing small amounts, 2,000, 3,000, and then kept on experimenting. So having learned the first lesson the hard way, which is FNO is not made for me, and certainly as the data shows today that it is not made for 99% of the retail traders. Now my sole focus was to grow my other segment, which was the cash equity, where I was doing some trading and all. But there, I came to know that some stocks can be, 5x or 10x in a year or two. So I thought that why not pick some of multi-bagger stocks in your portfolio, and then maybe some will become 10x or 5x, and then you will quickly become, in my like portfolio size will quickly become big. So in quest of that, I tried finding the reasons ki why a stock quickly goes to 5x or 10x in a year or two. I noticed few things in such stocks. So one was that their profits grew very exponentially during those periods where the stock price is going very up. So suppose a company is making a profit after tax of, let's suppose, 100 CR. Now next year they are suddenly doing 300 CR profit. So that will reflect in the stock price as well. The stock
Yeah.
price will also maybe 3x or even more if there is a PE rating involved. So I try to find stocks where profit can quickly go up. So for that, how can I like decide? How can I know the future कि किस stock का कितना profit होगा in the next 1 year or 2 year. So for that, I came to know that there are some con calls organized by the companies. There are some investor PPTs. So through that con calls and investor PPTs, if you read them, you get to know the future vision of the company's management. So in those con calls, investors, big investors come and fund houses come and they ask the management, what are your plans, how are you going to scale up your business and all those things. The management replies to them. So through those answers you can get to know ki what is the future projection of the company's profit and all. So that will give you a fair idea ki maybe इस company का profit अगले 1 साल में या 2 साल में what will be the profits. If that grows exponentially, then it's likely that the stock price will also do well.
Yeah.
So I tried searching for some of those stocks, but again I realized that I was making a mistake in a like next 5 6 months, because it's not that कि अगर earnings बढ़ेगी तो definitely stock price बढ़ेगा, because I found a stock जिसमें मुझे लगा कि that stock can increase its earnings, but the earnings increased by 30% year on year, but the expectations of the market was more than 30%, let's say 50 or 60%. So in that case, even though the earnings increased, the stock price will go down only because it is not beating the expectation of the market.
Yeah.
So because market is future looking.
Yeah.
So if a market is expecting that you will grow your profit by let's suppose 50% and you grew by only 30%, then market already discounted beforehand that you will grow 50%, so I'm giving you a high valuation, right? But if you don't deliver that result, then market will punish you because earlier it gave you higher valuation, now you are not performing, so it will derate you. Yeah, it penalizes it. So now my goal was changed. Now I focus कि वैसी companies ढूंढनी है which can grow their earnings by a higher degree than what the market expectation is. Okay, so this breakthrough came during COVID. So during the COVID time, most of the I read some news and articles and on money control and all, that many Chinese chemical factories are shutting down because of some new environmental regulations. So I knew that the Indian chemical companies are going to do well because they will be replacing the Chinese companies in terms of exports and all. Plus, domestically also, India was importing from China all the chemicals, so that dumping would stop, and these companies' margins and all can expand. So I picked up a couple of chemical companies back then. One was, I think, Alkyl Amine, one was Balaji Amines. So I bought them really cheap. For example, Alkyl Amine I bought in, I remember, October, November 2020, around 1200 at that time it was trading at. Then it quickly went to 4000 in the next 8 months. And that was the, bingo moment for me, that I have made it. I now know what I have to
I'm
do.
invincible.
I am invincible. I am the king of the market. Soon I will become, Rakesh Jhunjhunwala and all. But again, my dream shattered. So the market started correcting in September, October 2021. That all the chemical stocks also started falling. I thought that this is a normal market dip. It will soon come back up again, because during this time also, from where it went to 1200 to 4000 in a matter of 6 to 8 months, there were in between there were dips of 5-10%. But so I thought that this is also a dip, but it kept on correcting, and it reached around 2500 or 2600 levels. So that was almost 40 or 50% down from the all-time high level of 4000. So my unrealized profits went down a lot. So now I learned my third lesson, that booking profits at the right time is also important. So you have to know the art of selling. The
Yeah.
art of buying alone is not a complete package. For that, you know how when to sell the stocks. That is also something which you need to learn. So for that, I tried understanding the market cycles also. कि अगर if I knew beforehand कि there is some overall market correction going to start in October or September 2021, then I would have booked my profits.
Yeah.
But how to predict it? How to predict the market cycle? Everyone says that markets can't be predicted. But when I deep dived into it, researched on it for a few weeks and months, then I realized that there are 3-4 indicators and structure or method through which you can predict कि market is going to top in this quarter or in these 4, 5, 6 months. So you cannot pinpoint कि इसी day पे market का top बनेगा, इसी day पे market का bottom बनेगा. But you can say with a decent 90 to 95% accuracy that इस 3-4 महीने में ही market का top बन रहा है, इस 3-4 महीने में ही market का bottom बन रहा है. So that you can do if you
Yeah.
have a well-structured framework. You can backtest it and all. So I backtested it on all the last 20-25 years of Nifty small cap index, and I found that this structure or framework is working. So now I was ready कि अब कोई भी market correction आ जाए, मैं उस correction से पहले I will be booking all my profits. So because of that framework, I was able to guess that during Feb to March 2023, this was a very good time to invest for long term. But I was right because my system was back tested. That was the right time to buy stocks, but I didn't pick the right stocks. I stayed with my old chemical companies, Adani stocks and all. I didn't realize that every bull run has new set of leaders. So I didn't knew the concept of sector rotation back then. So since I made the money in chemical stocks and Adani in the previous bull market, I thought this will again the market is going to be good. I will again make the money in these stocks only. So don't marry a stock, don't love a stock. So each bull run has different darling stocks. So you have to pick them at the right time. So market cycle is only about timing, but sector rotation is something which I also needed to learn at that time. So now, like after researching a bit and learning about it from some industry veterans, market veterans, and all, now I understand how to identify which sectors are going to be the next bull runs winners. So at that time, I realized after a few months that chemical stocks and Adani stocks are not going to perform in this bull run. Then I focused on which stocks are making new all-time highs at that point of time in the early bull market of 2023. I realized that power transmission stocks like Tarel, Silchar Tech, and some solar stocks like KPI Green were making new all-time highs. The entire sector was looking very strong. I understood the tailwinds behind them, what is driving this crazy run up. So I understood that this is a long 2 3 years type of game, and I can play it well. So I picked up KPI Green at that time. It went to like 4 5x. Terrell, Silcher Tech, so all these made good money for me. So I was a bit late to the party, but still, being in the party is more important than being late. Now comes the next learning, which was portfolio building, allocation, and risk management. So earlier I used to have like 40 50 stocks in my portfolio. So due to that, even after making 5x in KPI Green or Alkylamine and all those stocks, still my portfolio grew at a moderate 20 25% CAGR. So I thought, why not focus only on the most convincing bets, because I knew when I the day I bought them, I knew the thesis behind them, I knew everything, but I didn't allocate it enough. I I instead focused. I like bought many stocks,
It was not
even the
concentrated
average
enough.
ones. Yeah, it was not concentrated enough to reap you dividends. So now, but the only worry I had with over concentrating my portfolio, let's suppose only putting 7 8 10 stocks in my portfolio, is that I thought that what will happen if some of these stocks crash by 30 40 50%, then my entire portfolio can get severely impacted. So, but later I understood that this is not a way of risk management. Diversification is not something through which you can manage your risk. There are other more, excellent ways of risk management, be it stop loss or position sizing. These are all
Capital rotation.
better risk management strategies than diversification, because if you will over diversify your portfolio, even your 5x 10x winners won't make much impact on your portfolio. But during the down market cycles, you will not be quick enough to exit all of your position at once.
Your capital will not rotate also
Rotate
not much.
quickly, yeah. Your capital will also not rotate quickly. So all of these things have been incorporated, and I think we have also made a video on the risk management and position sizing in detail, where we have covered this entire strategy in detail. So maybe we can attach that video link in the description. So these were the learnings, core learnings for me, which have shaped my strategy so far, and I believe that I will continue learning new things over the next few years. And I'll keep sharing with you whatever I learn, whatever new I learn.
So I think given that we have shared insights into our journeys, our learnings, our mistakes, uh, we would love to share a roadmap for all of you, for folks who are starting or are in the midway of their stock market journeys, or even if you feel like you've mastered the art of stock market. I think that learning never stops. So looking at investing and saving and finance from a broader perspective, I think step one would be to increase your earning potential, and um, at least if you don't have like maybe 1 to 1.5 lakhs monthly salary, you should focus on upskilling and increasing that delta, so that you will be able to save a lot more and have that peace of mind before you invest a big chunk of your money in the markets. So your income is essentially your fuel to your investment journey, never forget that. So keep upskilling, keep learning, keep increasing your salary with good hikes, promotions, and then think about investing a big chunk of it after you have your expenses and your savings sorted. So that brings me to step two, that is completely sort out your personal finances, like how we did. We built a robust emergency fund. Both of us have our emergency funds. It's not like we have a collective one. Even before we got married, we sorted it out. So build your emergency fund, which will ensure that your savings are intact in case something, an emergency comes up, or you're at the least risk of losing your job. Sort out your health insurance to add another protective layer to your investments and savings. And for that, feel free to check out Ditto, their platform. I will link it in the description box and the pinned comment as well. And once you have these two sorted out, then go full on into learning about the stock market, investing, and really upskilling in that department.
So regarding your stock market education, I will advise you to read books by famous authors like Mark Minervini, William O'Neill, Peter Lynch, who have themselves made money from the market, right? And also, while buying any course or anything regarding stock market, check the credentials of the instructor, whether they have themselves made money from the market or not. Because most of them are today, fraud or scamsters who are just pretending a rich lifestyle through your through the
Lamborghinis
money,
and
yeah, through the money they get through courses only.
Made
Seeing
up
that
lives.
people, keep on subscribing to their courses, that they are so rich, they must have made money through markets, but they will never share
Their
their
verified
verified P&L. They will never feature on Sensibull because they are not making money from the market, right? So check these credentials first before buying any course. So if you want to like check our framework, see our in-depth analysis and in-depth learnings, then you can check my course on MSTRM Framework for technical analysis. So maybe we'll attach a link in the description box. So in that framework, we have covered market cycle, then the sector analysis, then the technical analysis, then there is risk management and the mindset. So all of this is comprehensively covered along with the stock screener which we use to figure out sector rotation as well as for looking for trading stocks. So that you can check out our course through the link in the description box.
And as part of the course, you'll again, as Harsh mentioned, you'll get lifetime access to our proprietary stock screener queries on charting, which you can use anytime you want to find amazing stocks which are positioned for a breakout or explosive growth. You'll also be added to our WhatsApp community of serious investors and traders, and this network will really help you upscale your stock market journey. And all of it is pre-recorded. We have 8+ hours of content on all of the topics that Harsh talked about, and you'll have lifetime access to these recordings. And again, as I mentioned, the bonus, the queries, and all of the content that we've shared. So to thank our amazing community and our audience for being so supportive, and constantly we've been receiving your messages, your DMs, your emails on please bring out new courses. We're happy to announce this to all of you, and we're offering it at a massive 80% discount, which is short lived. So please grab your spot before this discount ends, and do give us your feedback. We will keep iterating on the course and improving it with time. So stay assured of its freshness as well with time. So I hope this blueprint helps you to start your stock market journey, and make truly life-changing wealth in the stock market. And do give us your feedback on how this roadmap is working out for you. So this was all about our learnings of going from like a mere couple of thousands to a couple of lakhs of portfolio, to now being in a position where we have been able to book a significant profit in just the last 6 months, and we're only getting started, I feel. So it was not just luck being on our side. We were constantly evolving and learning with time. So you can also learn this process as I've already shared with you. Also, just a quick FYI, if this video prompted you to think more about your health insurance, do book a free call from Ditto. We love the platform, and I hope you can derive value from it. So I hope that you were able to get some nuggets of wisdom from our journey of making mistakes and learning. So if you enjoyed hearing about our story, please do give a like to this video and subscribe, because it really helps the algorithm and helps us reach a wider audience, right? And do give us your unbiased feedback in the comment section. We'll be looking forward to it and improving our content for all of you. Also in the comment section, do let us know what are your personal finance goals at the moment, and we would love to have an engaging conversation with all of you. So we'll see you in our next video. Till then, happy investing.